Okay, so good morning, everybody. We're coming up to 10:30, so we'll start our webinar. My name is Rose Kervick, and this is Accountant Online's Business Growth webinar. And today we're going to be talking to Chris Berg about Chris Burge. Isn't that how you pronounce it, Chris?
Yes, soft G,
yeah.
Burge.
Oh, Burge, okay. And we're going to be talking about crowdfunding, so equity crowdfunding, and who can do it and how does it work and how to prepare a campaign and tips for success on it. And so throughout the presentation, I'll be looking at the Q&A and the chat and moderating there. So I'll stop Chris for questions as we go. These webinars usually last about 45 minutes to an hour, depending on how active your questions are and how much detail you'd like us to go into. We record the webinar, so we send on the slides and the recording to you afterwards. And if you have registered and you haven't had time to join us this morning, or if you need to leave halfway, we'll send you on the recording for you to listen to whenever you're able to. So thank you very much, Chris, for joining us. You came highly recommended by Dublin BIC, who we did a webinar with recently. So we got in touch with you to come along. Could you start by telling us a bit about your own business and why you set it up, where you saw the need? Because this is, it seems like it was the first and only crowdfunding company with this market.
Yeah, no, we are. I've lived in Ireland now for over 20 years, so most of my business life has been here. And in that time, I was a kind of a very small time investor, kind of a little dabbled here and dabbled there. But I saw the rise and success of crowdfunding, or equity crowdfunding in particular, in the States and in the UK and further afield as well, of course. And I wondered why there wasn't one here. So I, together with my co-founder, we investigated it more and more, and realised that it was something that we could do, and we had some knowledge of, and the connections to kind of bring both sides of the market to a platform, and we decided to give it a whirl. So we started it 3 years ago. May 2018 was the date we were incorporated. And in that time, we've really grown and have supported a good number of businesses now. Most of whom have been Enterprise Ireland businesses. Some have not, but we're happy to deal with both. So yes, that's how we all got together.
Great. So today, then, you'll tell us how, if we're a startup or a small business, how we might raise funding ourselves using Spark, but also how we might get involved as an investor as well. Is that?
I'll touch on both sides, but more about raising funds. But happy to answer questions from both sides, and hopefully we can make this quite interactive. And as you said, Rose, then stop me if there's a question that comes in. It might be quite pertinent to that particular area, and we can do it that way. But happy to answer questions at the end, of course, as well. So.
Yeah, super. We'll do that, Chris. Okay, take it away.
Okay, well, thanks very much indeed, and thanks very much to Accountant Online for asking me in today. As I have a Skype message coming in, sorry about that. I should have put on my notifications to be stopped. Yeah. So let me just do that quickly, and then we can not be disturbed.
Sure.
So you can see my screen, can you? Okay.
Yes, that's perfect. Thank you.
Right. So let's move on to the next one. So what is it? How does it work, and what can it do? That's what the first bit of thing I'm going to be touching on. How to prepare, and what we need to what you need to do to actually get a campaign live and up onto the platform. And I'll touch on a guide to the success of what crowdfunding, what elements are there that make it a successful crowdfunding as well. So equity crowdfunding, what is it? Well, think of Dragon's Den online. And so we have a marketplace where we have companies seeking to raise money on one side, and on the other side of the marketplace, we have a massive database of Irish, or mostly Irish, investors as well, wanting to invest into young, burgeoning Irish companies. And so we're pretty much just a facilitator. We just put the match the two together. So that's how we do it, and we connect investors with high growth companies, and that's what we do. But it also democratizes the investment opportunities as well. So anyone can raise money, anyone can invest, and our minimum amount that we have is normally €100. So anybody with €100 can invest in a company. Whereas before, of course, if you had a modest amount of money and wanted to invest, it would probably cost you as much, or sorry, more in the legal fees in order trying to organize it. And really, in reality, you couldn't do it if you wanted to invest into the first, be a part of Stripe at the very beginning. You couldn't do it because they were talking to VCs and private equity houses, and the average Joe on the road, on the street, couldn't invest in them. There wasn't a facility to do so. And this is what we do. We open it up to everybody to do that. So there are different types of crowdfunding, and I'll just touch on them all before I talk in detail about equity crowdfunding. So the first one is a donation type. It's a philanthropic donation. So if someone's kind of running a marathon for a charity, you as the investor, if you like, or the giver of the money, you're not expecting a return on this at all. You're just giving the money for that purpose, and you know that it's going to a good cause, and that's one element of crowdfunding. The next one, and you may have come across these before, things like Kickstarter and Indiegogo, and these are companies. These are two American companies, but nevertheless operate internationally, where you would give an amount of money and you would expect a reward back for it. And the reason I've got a T-shirt and a cap there is because if you're putting in a modest amount, you might just get a branded element saying Stripe. Let's use that as the analogy. Stripe, and you get a T-shirt with Stripe on it. If you put in a bit more, then you might get a service or a product from a company who's raising the money,
like a free subscription or something.
That's right. Yeah, exactly. And this is more for pre-sales, if you like. So if you're making a new widget, you would get the people behind investing to pre-buy the widgets, and so that's how that would work. The next element is lending based. It's a peer-to-peer debt facility. So again, this is equity crowdfunding, but you're raising debt as opposed to raising equity. So this is and there are a number of operators in the country that do this. You typically get somewhere between 5 and 15%, depending on how risky it is. And that's what the peer-to-peer crowdfunding does. But we are an equity-based crowdfunding company. And in that, you'll get shares in return for your investment into the business. And of course, you expect a financial return for that. And you hopefully will get an increase when the company comes to sell. The normal release of that funds, the exit, if you like, is when that company goes on to do a trade sale or an IPO, when they go a public flotation, for example. And we are the only operators in Ireland that do this. I've said there, you've got a potential to have a very large increase. That could be 100 times, or more even. But it also, you could get zero from it as well, and that needs to be explained as well. The company could fold and not actually go on to do anything, and of course you lose your investment in total at that stage. But we know that kind of probably 5 companies out of 10 will die and will not actually go on to make any to produce a return for the investor. But we know number 6 and 7 will, you'll get a very small return. Number 8, and hopefully get a nice, something that then, and hopefully 9 and 10, there will really be a nice big return for you. And obviously that makes it counteracts the 5 that you would have lost at the beginning, or even 6, maybe even as well. So that's what the different types of crowdfunding. So as I said before, we're an online dragon's den. You get, when you put funding into the business, you get a share in that business. And it's marketplace. That's what we are. We are a marketplace for investors and companies seeking investment. So how does equity crowdfunding work? ECF, equity crowdfunding. So there's an application process, and you apply to go onto the platform. There's we have quite a sifting of those applications. There are some that are just absolutely not eligible for the platform, and you go through a number of different stages, and hopefully, if there's a green light from our side and still a green light from your side, then we go on to create the campaign. And that creation of that campaign is a number of elements, 3 main elements, and 3 or 4 other other elements after that. But the 3 main elements are the creation of a video, the creation of the pitch deck, and the creation of the text that goes along with the campaign as well. And once we've got those 3 main ones, and as I say, the ancillary ones as well, then we have a campaign ready to be launched. I have there a premium service there. We offer a premium service where we can write that for you. We know what our investors want to hear and see in the pitch deck and on the video and things like that. So we can write that video script for you. We can write that deck for you as well, and that's just another service that we operate, and we have some very good copywriters on board with us, and they do that. So once it's done and ready to go, we launch it to the world, and so it goes up onto our site, and we start promoting it as widely as we can. We promote it to the thousands of investors that we have on our site, and we expect you to do the same as well, and you promote it throughout your contact base and use social media and everything else in between to raise awareness of it and the fact that you're raising money, and hopefully there'll be sufficient number of people that will actually contribute to it and invest into the business as well. At the end of all of that, hopefully we've raised the minimum target, and if that is the case, then we can close, and we then go on to do the legal work around it, and ultimately then once everything is done and dusted, we release the funds to you. The actual period of time it takes it can be very, very quick. The introduction, sorry, the application and the preparation in advance can take as little as 2-3 weeks. Sometimes it takes 4 and 5, but it's not months and months. We do an element of due diligence, as you'd expect, of course, but a lot of the companies that we have, as I've said, are Enterprise Ireland clients. So Enterprise Ireland have done an awful lot of the groundwork on that side of things as well. So we kind of, our investors take solace in that as well. So there's not a huge amount more that that they can do more than Enterprise Ireland will have done. So that's how it does that. So talking about the time period, so 2, 3, maybe 4 weeks of engagement up to before the campaign. The campaign typically takes 4 weeks, although it can take a lot less. We just raised last month, in February, 1.2 million for a company called Acure, and we did that in 10 days. So it can be incredibly quick as well, as that proved. And then once we've got it and we close, then the legal element to it, again, we've got a very slick legal arrangement now with our solicitors, and we've dealt with many of the other solicitors in the country now to close these. So each of them know the process now, and we can close that normally in 2 weeks, 3 weeks at a push.
So start to finish then, about kind of like a 8-12 week process?
Yeah, very much in that time frame. Yeah, absolutely.
Okay. And what kind of stage are the businesses at typically when they start with you?
Yeah, we've got a very big spread, if you like, or spectrum of what level the companies are at. Some of them are pre-revenue, but they would have done an awful lot of work on the tech in the background, perhaps. Some of them are, but I mean, of course, it makes it a lot easier for the investors to invest once you're post-revenue, and actually raising funds. But nevertheless, it is possible to do, and we have done it many times for companies who are pre-revenue. So they're not generally kind of companies that are 10 years old. These are generally young companies, and the investors who are on our site are looking for high growth companies. If your company's been around for 8, 10, 12 years, that they hopefully will have done their high growth at the early stage. But nevertheless, still happy to consider older companies as well. We're not limiting it to young companies. It just tends to be young companies that seek our services for raising money. So who can use equity crowdfunding? Well, literally anybody. I mean, as we said, urban, rural, male, female, tech, non-tech, B2C, B2B, post-revenue, pre-revenue, as I've said. The amounts we can raise, well, we start at 100,000, so anybody seeking 100,000 or more really can come to us. And large amounts, well, the largest we've done, as I said, is 1.2 million just last month before last. So anything in between as well. But our sweet spot, I think I've got a slide saying that in a second, but our sweet spot is somewhere between 250 and 600 or 700. That's probably where most of our stuff is. But nevertheless, we've got aspirations to grow into bigger elements as well. And the fact that we raised 1.2 million in a period of 7 days means that we've obviously got the crowd there with the investors there. And so we'll obviously test that maximum as time goes on as well.
Okay.
So these are just examples of the companies that we've done and the size of raise that we did for them. As you can see, most of them have been Enterprise Ireland HPSU status, a few Leos in there as well, as you can see, and a few people one or two that haven't been aligned to either. And you can see on the B2B side, anything from just over 100,000 to 1.2 million, and on the B2C side, the biggest we've done is Moby, which was almost 800,000, and that was just before Christmas as well. So as you can see, very varied and a big spread of monies that we use. This is the sweet spot slide that I was talking about. So our minimum is 100,000, and going up to 1.2 and beyond.
Very good.
So what does it do? Well, it democratizes the investment. As I mentioned before, it's not just limited to large angels, syndicates, or VCs now. Anybody with €100 can come in onto the site and invest. The registration process for us is very straightforward and simple. Literally will take you 2 minutes. All we need initially is your name, address, and email. And telephone number, and the answer to 10 very simple questions that let us know that you are aware of the risks involved and all of the other elements that we need to kind of make sure that you understand that you can lose all your money, but obviously there is an upside to it as well. So it means the platform enables that friends and family and general contacts that you have in the business world can invest without the expensive professional fees I mentioned as well, which heretofore was just not possible. So the investors will all be channeled into this thing called a nominee company, and that means that there's only one line on your cap table. So it makes it a nice, very clean way of investing. So the actual company themselves only has one line on the cap table, as opposed to many names of very small shareholders. So it makes it very easy for you to then go on and raise further money later on maybe from a VC at that stage, or from a private equity house at that later stage. And there's no complication by having many small investors on the cap table.
Chris, a question from David. What portion of the company shares would usually be offered through crowdfunding? Is there any limit?
Well, we like to take, it's not us that decide that, really. It's really the valuation of the business and how much money you want. So if we look at the companies that raise with Enterprise Ireland, there's a level just below HPSU called CSF, Competitive Start Fund. And that is the entry level, if you like, of companies starting. And Enterprise Ireland give 10% equity, so take 10% of equity for €50,000 of cash injection at that point. So that values the business at 500,000. So that is the starting point, if you like. Now, if you have built your tech and got many your revenues climbed, and you can demonstrate that you've got massive growth potential, you've entered into another market perhaps, and all of these other elements means that your valuation goes up. And as your valuation goes up to maybe 1 million, or maybe 1.2, or maybe 1.5, or maybe 2, then you can, and you then kind of work out how much you need, what your valuation is, and therefore how much equity you need to give away for that. So let's just take an example of if your valuation has gone up to 2 million and you're looking for 200,000, you'll be giving away 10% again. And it's as simple as that. The equation is not quite as straightforward, because you have to look at post money against pre-money valuation, but it's there or thereabouts. So if the business is valued at 2 million and you are seeking 200,000, then that's a 10% equity stake.
So classic Dragon's Den.
Absolutely, yes, exactly. But the valuation, sorry Rose, before you ask the next question there, but the valuation is the most contentious element to this. And of course, many companies seeking funds are saying, oh yes, my company's worth at least 5 million. And we then need to bring them back down to earth, because one of the elements of crowdfunding, of course, is there's no negotiation. Whereas if you were sitting in front of a VC and you said, okay, we think our company is valued at 2 million, they would go, no, it's not. We think it's valued at 1, and you might come to a valuation of 1.3 and agree to that. But of course, on crowdfunding, there's no negotiation. The investors either invest or they don't. And that's the element that we need to kind of get across to you early stage as well. So you need to be quite conservative with the valuation when you're coming to us as well. But that's further on. So Rose, you had a question there.
Sure, there's some more questions here. From experience, what have been the tax implications for the startups taking on funding through Spark crowdfunding?
I'm not a tax expert by any means, but the little is the answer, because you're raising funds. That you're not. There's no capital gains here. There's an element called EIIS, which I'll kind of talk about briefly. And that means that the investors get a tax break on the money that they're investing, which is a very nice incentive that the government have. So they actually get 40% back. So if you are an EIIS qualified company, then you will the investors who invest in you will get a 40% back. So if they invest €1,000, they actually are only spending 600 euros investing, but they get €1,000 worth of shares. Obviously, it doesn't cost you as a company anything. It's an incentive that the government gives to them, so they give them a tax relief on that investment, and that obviously that inducement from the government is there to stimulate investment into early stage businesses. So, but you as a business, there is no tax implication. And again, don't quote me on this, and you'll need to get your own tax advice, but the investment in is money that it goes straight into the business, and it is there as an investment in, and you go away and spend it as you see fit, but hopefully to the benefit of the business, so that you can grow the business and expand.
Sure. Okay, and then a question from Mark. For medtech companies, what technology readiness level is usually suitable for crowdfunding? For example, would there be funding for devices at preclinical studies level?
Yeah, very much so. In fact, we've spoken to a number of medtech companies, some of whom are not that far away from going live on the site. And yeah, very much. And we realize obviously that it's going to be pre-revenue, of course, and even pre-trials as well in many cases. So and we know that the valuation, of course, in those medtechs is higher because of the certainly the level of IP that's in it, and the growth potential that is there as well. So yeah, absolutely happy to talk to medtech companies about raising money, and as I say, we've got
at any stage
one or two at early stage, and we've got, as I say, 1 or 2 in the pipeline already, so happy to open up those discussions too.
Okay, and what are the fees for setting up at Spark?
We charge a 7% fee. That's it. It's a very straightforward fee. the premium service that I mentioned earlier on is a premium, is an extra. But no, our fees, our main headline fee is 7% of what you raise. So if you raise 200,000 on the platform, our fees would be 14,000.
Okay, great.
Okay.
And just a question, you mentioned EIIS. How does a company register with as an EIIS?
So EIIS used to be, you had to seek approval from revenue beforehand, but there was the budget in 2018, I think it was, that Donahue changed moved the process, or changed the process rather, so that you became a self-assessed. So from January 19, you became self-assessed. So you look at the criteria and you go, yeah, I tick that box, and that box, and that box, and you go, okay, I'm self-assessed, and that's it. It's probably good to get an accountant to kind of verify that with you, and I'm sure Accountant Online will be able to kind of, nice plug there for you, Rose, would be able to assist in that. So they would kind of go, yes, okay, we think that you meet all the criteria, and away you go. But this EIIS was an extension or a change from the old BES system, and really is there to start and to stimulate early stage businesses, and as long as you're not dealing in financial instruments, insurance and property, I think you're pretty much, and I'm not going to say guaranteed, but almost guaranteed to be qualified for EIIS. So that's my take on it, at least anyway.
Yeah, there is a revenue link which shows the detail of that, the criteria for that.
Yeah, absolutely.
Okay, and just on the fees then for that Spark charges for the basic service, it's 7%, and for the premium service?
So the premium service is where we will write the video script, we will write the deck, we will write the text that goes on there, we will prepare a press release, we will, what else we do? A one-page investment summary page. And for that, we charge a 2,500 upfront in advance of the campaign going live. And if it's successful, we charge another 2,500. So 5,000 in total. But if it's not successful, then it's just the 2.5. But of course, it's in our interest, of course, to get you across the line and to make you successful.
Yeah.
And just
what's your definition of success then?
Success means that you've reached your target, and and it then is a successful campaign, and we can then go out to close. So it's good also with regards to that target to set your target, at a moderate level. Obviously, you need a certain amount, and that needs to be indicated, obviously. But so you'd set your level at a modest target, hoping to certainly reach it and perhaps even go beyond as well. And you'll see a number of in fact, on one of the slides I just showed, those companies that had gone to 180 and 220% over their funding limit. Sorry, not limit, over their funding target. And that they were successful. And if you don't meet that target, then you're not successful, and unfortunately we walk away. If you're almost there, we'll extend the campaign for another week or another fortnight, and hopefully we'll get over the line. But if you're miles away and you've been up on the platform for 4 weeks, 5 weeks, then we'll shake hands and walk away and say thanks very much, but it's just not worked for whatever reason.
Okay, so 7% straight fees, 7% of the amount raised, and then a premium service where you write all the deck, etc., and that's 5,000 as long as you reach your target.
Yeah, absolutely.
Okay, and if you exceed your target, does that require more equity?
Yes, of course. So your valuation is the element that's fixed when we go live is your valuation. So if we go back to that example of 2 million, if you've valued your business at 2 million, and you've now not raised the 200,000, you've raised, let's say, 300,000. So you're now giving that extra 5% away. So it's now not 10% you're giving away, it's 15% you're giving away. And of course, if you raise 400,000, you're giving 20% of the business away. So that's how that works. So yes, absolutely, you give more equity away the more money you raise.
Okay. And can you do a second round using Spark as well?
Yeah, absolutely. We've not done one yet, but we're actually in talks with two of our alumni, if you like, that are seeking the next round now, and we'd be delighted to have them back on the platform. So yes, absolutely.
Okay, great. I'll let you continue now.
Thank you very much. Just one of the points that kind of triggered something for me as well, the success rate as well, or the number of people. So over the last 18 months, we've had 100% success rate. So every company that we've put onto the platform has gone on to raise the money, which is we think a very good accolade to have. It means that we're quite selective in the type of companies that we put up there. Of course we are, and I'm sure there are some good companies that we have just kind of said thanks but no thanks to. But nevertheless, if you go up onto the platform, there's certainly a very, very good chance of you getting that money into the business. Just because of the fact that we are selective and we know what our clients, our investors are looking for.
And Chris, lots of questions about putting a cap or a ceiling on the amount of equity you release. I suppose it could become so successful that you give away more equity than you intended. And is there a way to avoid that? Or
absolutely. Listen, you're in charge. This is your gig. So so
how would you do that?
If it gets to a point where you're going, listen, I don't want any more money, don't stop. Then you can just pull the plug and we.
Okay, because it's happening live, I suppose, all the time. So you just stop it when you want to. Absolutely. Okay, I see. Okay, so that could get quite exciting, I take it, does it?
Yeah, and it does. It's if you were to go live, I'm sure the refresh button gets pressed quite a number of times.
But there's not a limit that you put in. You're really leaving it wide open.
We can put a limit in, and
can you? Okay.
That's no problem. We've not had anybody request that yet, so everybody is quite keen to take as much money as they can. But no, of course, in all seriousness, no, there is you're in charge. You decide how much money you want to give away, to take in, and how much equity you want to give away, and you can make that call. So
super. Yeah.
Okay. So. Where was I? Anyone can invest on the ground floor. So this means that anybody can kind of come in at the very early stage and invest. So you could be the next investor into the next Stripe of this world, which would be great. So we believe we're filling this gap and a funding gap. So a lot of the pillar banks are very very vocal in saying how much they're backing Brave and kind of funding these early startups, but in reality, we found that they're not, or not to the extent that they should be anyway. So there's a big demand coming in from that element or that side of it, but also on the institutional and professional kind of the VCs of this world, they do cover the size of raise that we do. Some of them don't. Some of them are just really from 10 million upwards or 5 million upwards, but nevertheless, there are some VCs that do cover the early stage. But again, particularly through the pandemic, we found that a lot of them were really closing their doors and going and protecting the investments that they'd already made and refinancing those if they needed to be refinanced. So over the last year or so, we found that this gap has actually widened, and we're widening as well to fill that gap that the banks aren't lending to, and the VCs and the private equity houses aren't funding as well. So we like to think that we're filling that void and providing that service for early stage businesses.
Very good.
So how do we prepare, or how do you prepare? So there's an amount of due diligence that we need to conduct, of course, and so there's a number of documents that we need to see from you. Finance, bank, statements, bank statements, who you are, to make sure that you are who you say you are. But anyway, that list is not particularly onerous, and I'm sure you'll have much of that information to hand anyway. We need to simplify the message going to ordinary investors. So you're not going to be sitting in front of a specialized VC who only deal in medtech or only deal in B2B SaaS companies or whatever. So we're going out to a wide, broad church of people. So we need to kind of get the message across to them quite succinctly, because this is again a very quick way of getting the message across to these ordinary investors. So we need to kind of be careful how we put that message across and simplify it. That's what we need to do. So we need to get other investors then to support the campaign. So that means from your own kind of cohort of people in the business, your own friends and family and contacts that you have, and get them to invest. And obviously we do the same from our side. And there'll be another element of people who don't know you yet and don't know Spark yet, but are introduced to it through various kind of promotions that we will have done, or maybe they've read about you in the paper that you're doing a crowdfunding campaign. Because the PR is an important element to this as well. So if you have a B2C business, then you can also create a very good demand from your client base. And we've had a number of occasions where that's actually happened. I'm just thinking of BusterBox, which we did recently, and Mobi, of course, as well, which was even more recent, where they have got a big database of users and of their own clients who some of whom might want to invest as well. Now, typically they'll probably invest a smaller amount, but nevertheless, that's what the crowd is there for. You get a lot of smaller investments into the business. Well, I'm talking about actual the smaller investments. Our average investment is about €2,500 per person, per investor. Now that hides a huge amount of numbers of very small investments of 100, 200, 300, 400 euros. But it also hides a significant number, but a smaller number, obviously, of very large investments. And so our single biggest investment by a single investor into a single campaign was 200,000. But we often get 50s and 70s and hundreds going into campaigns as well. I'm talking about 100,000 here, sorry, into campaigns as well. So a significant number of large investments, but small number, but a large number of small investments gives us that average of about 2,500. So the last point on this slide is you need to sell the company when you're preparing all of the information. You're not selling the product. You need to obviously tell them what the product does, but you don't need to tell them about every bell and whistle that the product has. You're giving them the information of how good this is and what the demand of it will be around the world, hopefully, or maybe even more locally around Europe or around Ireland even. But you're selling the company, and you need to get the investor to buy into the company, not necessarily buy into the product. And there's an important difference between the two there. So success factors. So you need a strong founding team. If you are just a one-man band, still it's possible, absolutely. But nevertheless, having other people in the team and making them and with the good knowledge and even maybe track record of starting businesses before is a very good element to this. I've got IP rich, so if it's an IP, if it's a very rich IP company, then that makes it very much easier to sell. A lot of tech companies can't really protect their IP though, so that makes it a bit more difficult. Intellectual property I'm talking about here, just in case anybody wasn't sure. So if you've got a patent that you can actually show, then that's a very good thing to be waving in front of an investor. But anyway, that's what that certainly adds to the success factor. It needs to be scalable. It's no good just being kind of able to kind of just operate within kind of a small geographical area. We need to be able to scale this kind of hopefully internationally as well. Not always internationally, but certainly it certainly helps. We need to have an exit plan. Okay, what will that exit plan look like? Yes, I'm going to build this company up and I'm then going to sell it to Johnson & Johnson for €1 squillion. And that's what you need to be, have that in mind. You may be starting a B2B SaaS company that, I don't know, Salesforce might buy, for example, or that might be sold on to Google or whatever. but nevertheless, you need to kind of have in your own mind what that exit might be, and even also the duration of that exit as well. So is that going to be, 2 years down the line? Is it going to be 22 years down the line? If it's the latter, then the investment is not really going to come forth. We need to see an exit really between 3 and 7 years, and that's what we need to kind of have a look at. We need to be in revenue. As I said, we do operate pre-revenue businesses as well. Happy to facilitate that, but certainly the revenue helps. Need to have a good network, build up those Twitter followers, build up those Instagram followers, build up your own Rolodex of contacts on LinkedIn as well. And all of that will help you kind of spread the word about what you're doing, and hopefully make that investment more easily coming into the business. And you need to be investable as well. You yourself as the promoter, you need to be able to kind of give a good sales pitch. You need to be able to kind of stand up in front of a big crowd of people and be able to demonstrate that you know this business inside out, and you are the best person that is going to take this to market. And that's what I mean by investable as well.
And Chris, I'm sure all of this is apparent from the pitch deck and the video. All of those points are outlined.
Yeah, absolutely. You need to kind of hit each of those points in that in the information that you're giving out through across the platform. Yeah, absolutely.
Sure. Okay, I have another couple of questions.
Yeah, please go ahead.
So, is Spark able to support crowdfunding of separate products from a single company, or I take it you're investing in the company? And this question is, considering if investors want to invest in a single product technology sector and not for all the products offered by the company, this is company investment really, isn't it? So
this is company investment.
So you wouldn't be able to invest in a business unit in that company, no? Because it's equity investing.
Exactly.
Yep. Okay.
So we have the investors will take a share in the top company. So if you've got subsidiaries of companies below you from the top company, they won't invest won't invest in those subsidiary companies. They'll need to invest in the top company.
Sure. Okay. And then a question from John: what are the most prominent interest rates charged for the funded monies obtained?
We are not a debt facility, so we are only equity. So there's no interest rate, there's no coupon to pay. So the money that you get is absolutely yours back. Yeah. That's it. You've given away shares for this, and so there's no repayments to be paid on a monthly or annual basis. The money is there for you to spend as you see fit, but of course the investors are hoping that that's going to be, well, no, not hoping, are expecting that to be in the promotion of the business, whether that be hiring a new staff, developing that tech a little bit more, branching out into a new office in Israel, wherever it happens to be. So yes, that's what that's the expectation.
So it's an alternative to debt lending, and your fees are 7% plus additional 5k if you're going for the premium model.
Yep.
Okay. And then another question from Anne then: if the target isn't met, but and it seems like all of your targets have been met and exceeded, would that be the case, Chris?
No, we've had in the last 18 months, yes, they have been met and exceeded, but we have had some failures, absolutely, where they didn't make the cut.
Okay, but say it attracted some key investors, so a couple of people interested, but the target wasn't met. Can the company approach them, or would Spark approach them, or is there any kind of agreement there with Spark where you're?
If the investors, so if you don't meet the target, and as I say, we like to think that's an unlikely scenario if we've got to the stage where we're actually going live, but nevertheless, it has happened. If those investors are Spark investors, but still want to invest after the campaign didn't reach its target. So let's say you were seeking 200 and you got 150 from a number of, but 100,000 was from, 2 or 3, key investors who put in, let's say, 50 grand, 25 and 25. And those 3 investors wanted to still be, put in that money. Could they still do it? Yes, they could, absolutely. But they're Spark investors and would still incur the 7% that we charge, and that's our fee, of course, as you'd expect. And we can facilitate that afterwards. Yeah, it would be obviously it'd be done offline as opposed to online. But yeah, absolutely, it can be facilitated.
Okay. And then a question on looking for tips here, which would be specific insights in getting started with finance at pre-revenue stage. So I take it it's always easier to raise money when you're at post-revenue stage. At least you have kind of proven the model to a degree. But for this participant, she's asking about how she may seek investment at that pre-revenue startup stage. Any tips in maybe the pitch deck that you would put together?
There are a number of avenues that you can go. I mean, Enterprise Ireland, which I mentioned, obviously, is and that is the competitive start fund is a key one you should kind of go for. But there are plenty of ways of raising money for with your local enterprise office, the LEOs, and I really recommend doing that. Because they don't take any equity either, so you can do that first of all, and then go on to Enterprise Ireland, and then go on to whether it be Spark or whether it be a VC or whoever it might be after that. So yes, absolutely.
Start with Leo is usually the direction, isn't it? Start with Leo. Yeah.
You can get well, as a minimum, they have this thing called a trading online voucher, which gives you $2,500 to set up your site, your initial site. Which is very much worth taking hold of. Then they have the priming grant, which gives you some money towards your first hire or two as well. That can be up to 20 grand, I think. And then there's a business expansion after that. And there's also a feasibility study, I think, with them as well. So you could kind of get 50 grand from them quite easily if you play your cards right. So yeah, absolutely, that's probably the best place to start. But there are also, if you're based over on the West Coast, there's a place called the West WDC, the Western Development Corporation Council. I can't remember what the C stands for. So WDC, you'll find them. They're an offshoot of Enterprise Ireland. They can help, but there are many other places as well that you can kind of go to first of all.
Okay, and just then referring to your investors that are on the panel, what is their appetite like? So we have a participant who is interested in knowing the level of interest in fintech from existing Spark investors.
Yeah, absolutely. We poll all of our investors, on from time to time to see what their predisposition is to a certain sector or a certain vertical.
What do they like?
Yeah, absolutely. I mean, they're all very varied, as you'd expect. There are some people that are just doing sustainable ones, but some people are doing, but fintech is very kind of, I don't think there'll be many on the platform that aren't keen to do fintech. There's numbers that will just do med tech perhaps, but yeah, absolutely, fintech is a very hot one, and our investors are very active, particularly on those in those areas.
Great.
Okay, so mistakes: not enough research being done, not having adequate proof of concept, maybe not knowing your target audience. Not having enough marketing materials, and that's something that we will help you with, of course, when we come to put the campaign together. But you need to be very active during the campaign of promoting it. When you're raising money, normally if you were going to VCs, you'd be flying off to Berlin to sit in front of a VC company, or down to Barcelona, wherever it happens to be. You'll be jetting around the place in order to meet these people. You won't have to do that with crowdfunding, but you will still need to kind of keep a very much a weather eye on this and promote it as much as you can during the campaign. It's not an onerous level of task that you need that you'll need to kind of allocate to yourself, but nevertheless, it's something that is you'll need to be doing on a regular basis, and that's why I'm saying you need to have those marketing materials kind of ready for dispersal out to the crowd. You need to use your digital marketing channels very effectively. Your LinkedIn, your Facebooks, your Twitters, even TikToks even now as well. listen to the feedback. That's key from both the investors and also the other people in the market as well. And that's either prior to going live or even post going live as well. And also the lack of traction. You need to kind of demonstrate that, you know, your business, even though it's pre-revenue, you might be able to have a pilot out there. You might be able to have demonstration from someone that they're willing to utilize this, or even that there is a demand for it as well. So that's something that we need to do. Misconception. Well, it's not all about getting the money. There's a good element to a crowdfunding, is that you can use the PR around this to really accelerate the knowledge of your product or service in the marketplace as well. It doesn't have to be B2B. Sorry, it doesn't have to be B2C. It can be B2B as well, and still kind of get that out there as well. An online crowdfunding campaign is all I need to raise the funds. Well, no, you need to kind of do the other elements to it as well. You need to kind of have the full gambit of kind of the digital marketing side of it, the regular PR out to the regular broadsheets so that people can read that on a Sunday morning. You need to have the whole thing there as well. I put down there misconception: the longer the campaign runs, the better. Well, no, you need to kind of, this is a very tight period of time of, you know, 3 to 4 weeks, maybe even 5 weeks. You need to put as much concentration in that as you can, really drive it as much. If a campaign gets to 5 weeks, 6 weeks, even 7 weeks, we've by that stage exhausted all of the channels that we will have pushed it out to. There isn't enough appetite there, and therefore it's probably not going to work unless you've got one big investor that's just about to sign on the dotted line. Then it's probably not going to happen. So no, it needs to be quite a concise period there. Launching is easy. No, it's not. Yeah, there's a lot of work that needs to go on before you actually get to that stage, and that's why we've offered that premium service that now that is being a lot of people are availing of. And yeah, you need to put a lot of effort into that. Not an onerous amount of effort. This is not something you should be frightened about. You know, this is just part of raising what raising money is all about. You would do that same amount of work, and probably more actually, if you were going to VCs and private equity houses to hawk your business around. And crowdfunding will put off VCs and larger investors later on. Well, it might do if there are lots and lots of small investors on the cap table. But as I said earlier on, the cap table is just clean. It has one line on it and one investor, and that is the nominee vehicle that I spoke about. And I can go into that in a bit more detail offline if anyone would like to inquire a little bit more about that. A quick case study, Moby Bikes, their target was 300,000. We reached that in 4 days. Ultimately, they went on to raise almost 800,000. So they were 265% overfunded. There were 270 odd investors in it. The maximum single investment was 75 grand. The average, as I spoke about a short while ago, was almost 3,000 or 2,800 there. And they had a pre-money valuation of 5.5 million. We found that valuation was very punchy, and we were quite frightened about that. But there were some significant investors coming in at that price as well, and that is another indicator to us that perhaps our thought process is not quite where it should be. So we thought that the valuation should be lower than that. These other investors had come in and said, no, listen, we're prepared to put in significant money at that valuation. And so that obviously changed our mind, not changed our mind necessarily, but meant that we would follow that lead that they made as well. So that was something to consider. So why crowdfunding? Just finish up on this slide. It's simple, it's quick. It's the quickest money you'll ever get. If you're talking to a VC or a private equity company, then quite typically it could last 6 months, 9 months, even 12 months before you get your money. We can demonstrate that the process is very doable in between 8 and 12 weeks. It's low cost in so much that you're not having to jet around the place. You're not having to spend money doing that. It's all done from your desk. You get some really good free media exposure, extensive free media exposure, which is very good for both B2C and B2B companies as well. And you get a loyal tribe of supporters, which will, hopefully promote your business to other people as well. So that's what crowdfunding is all about. And thanks very much for your time.
Great, and perfect timing, Chris. Just coming to the end now. I just have a question from John around the video that you produce, and he's asked, is it a patch video or a demonstration of the product video as you would do for a Kickstarter, for example?
No, you can go onto our YouTube channel or even onto our site and see examples of the videos. It's you as the promoter to camera explaining why an investor should invest in you. So it's not a cartoon, demonstrating the product. It's not lots of flashy pictures. It's quite a serious.
It's your pitching.
Okay. You're doing that. So it's you in front of the camera saying why your business is investable, and that's what it is.
Okay, very interesting. Okay, so Chris, I feel much more educated on crowd equity funding today, and I hope the rest of our participants have enjoyed it also. So we certainly had lots of questions, and we have your details, don't we? If people would like to follow up with you directly, or I suppose just go directly onto the
that last slide of the deck has got my contact details. So happy to email me or give me a call, whatever. Of course you can reach out through the platform as well. Absolutely.
Yeah, super. Okay, great job. Thank you very much. It was really excellent. So lots of thanks coming through in the chat. And thank you everybody for joining us. We love to provide good value in terms of the webinars we present. So, and the partners we bring in to educate us a bit more in the marketplace. So anything that you as clients or subscribers to Accountant Online would like to see, just drop us an email on hello@accountantonline.ie. or directly to myself on rose@accountantonline.ie, and we'll set it up. So everybody have a great weekend, have a great day, and thanks again, Chris.
Okay, my pleasure.
Okay.
Thank you very much indeed.
Thanks. Bye-bye.